Okay, Nilesh Jain has joined in. He's head AVP Technical and Derivatives Research Centrum. We've been putting Kush on the spot this morning in studio. Nilesh, why don't you join in as well? We've seen the pre-open ending not as bad as would have expected. Do you think that we're going to see a recovery today? What is your Nifty outlook?
Good morning, everyone. So outlook is on a positive side, although we may see a negative start, but I think I'm getting a sense we may see a similar move that we saw yesterday as well towards the closing hour. We may see a rebound as well. So Bank Nifty is giving more confidence, similar to what we saw yesterday, and outperformance we are expecting in the Bank Nifty. And the strategy would be to buy on decline. Any dip towards 51,000 is a good buying level for the Bank Nifty. As of now, it's opening somewhere around 51,700. If at all we see any dip towards 51,400, 51,450, that can be a good entry point, and we are expecting a move towards 51,850 to 52,000. So these are the intraday levels, as well as positionally Bank Nifty is looking more attractive given the kind of participation that we have seen in the banking space yesterday. So better to focus on banking names. Nifty, the outlook is still on a positive side, but better to wait for Nifty to settle down, as Kush mentioned. At least for half an hour in the morning, we'll get a better picture which way the Nifty is heading. But as mentioned, I'm getting a sense that we may see Nifty closing about 23,200, and a weekly close about 23,200 will be considered as a positive close for the coming week. So with the stop loss below 23,100, Nifty is also buy.
Nilesh, 30 seconds exactly. Your call is on Bank of Baroda, I understand, and Patanjali. What's the view?
Right. So both the stocks are on buy list. Bank of Baroda, PSU banks as a whole are looking positive. So Bank of Baroda, we are expecting a move towards 245 with a stop loss below 231. It's a buy. Patanjali Food is another stock where we have seen a good breakout from a triangle formation, and Patanjali looks attractive for 1945 target with a stop loss below 1839. Patanjali Food is also a buy.
Okay, so those are some key calls. Well, Chakri Lokpriya, we'll get to you with some of these thoughts on specific pockets, because we haven't discussed IT today. It's just looking as brutal as it was yesterday, or maybe not as brutal. It was down 4% yesterday, but on open and the pre-open down about 1.5% is quite telling for what will happen to IT yet again. Infosys down 2.5%. Some others sulking. KPIT was down 8% yesterday. So I think we'll probably take both a tech and fundamental check on IT stocks as well. I mean, 26% now done from December peak is pretty steep. But here's how. We're starting off 0.25%. So really, not a bad bet with banks holding out. I mean, this is the Q4 update, I would reckon. IT sulking 1.7%. Mid caps and small caps actually pretty well behaved. Not that bad really. In yesterday's session, two small caps were pretty strong. Let's get the heat map up on the screen and let's see the gainers. HDFC Bank, Bajaj Finance, the Q4 update impact, if you will. Nothing dramatic, but in the green. Actually, very little green in the markets today, I must say. We're down 0.5%, but a fair degree of red. The quantum of red maybe suggests that the dips could be a bit more. Be that as it may, crude price fall, ONGC sees an impact. Infi amongst the IT names, along with Tech Mahindra and HCL Tech down in the red. Hindalco looking slightly soft as well. Watch out for that. Tata Motors continues to sulk, and with reason, because the downgrades continue there. Larsen is seeing 1.5% downtick. Reliance is seeing a bit of a downtick as well. Tamanna, I'm sure, will mark the oil marketing companies. If BPCL was here, would have shown. But be that as it may, I think watch out for the crude benefit. Well, banks on one side, tech on the other, Tamanna.
Yeah, and the banks on the one side are not really enough to lift the Nifty this morning. I mean, this is going to be a down day. It's going to be a tough morning. If there is a recovery from the second half, it really will be awaited. Right now, this is a rough day in the markets. There's no doubt about that. Private banks will be holding up. Financials will be in focus. This is why perhaps Bajaj Finance hanging on to the green with the skin of its teeth. Zomato, interesting note out this morning on Zomato, and maybe that's the impact that you're seeing. Let's pull up the broader markets just for a second before we move forward and see if the cut is as deep. Not as deep, one would say, but still about 1% down on the mid cap and about nearly % down, or 0.75% down on the small cap 250. Let's pull up the sectoral heat map, if we may, and see what's happening there. PSU banks, we told you this morning, and we've been telling you since the closing trade yesterday as well, that it's going to be banks which is the safe haven, the port of call. Not that this is looking too safe, frankly, but we said this morning as well that PSU banks may be back in focus. Those updates from Bank of Baroda, SBI may just have helped. What is doing the worst? Nifty Metal, Nifty IT, anything with a global face and a global exposure is going to be under pressure next few days as the dust settles on tariffs, as the details are worked out, as those spreadsheets tell us which company is going to be hit to what extent. Nifty Metal actually the big loser this morning, 2% down. But having said that, the losses are nowhere near what we've been seeing on Wall Street, if that is any kind of relief to take forward. Let's go to individual stocks that are on our radar. Masgao Docs on our watch list this morning, and OFS announced by the Government of India 8% discount to current market price. Let's see how that has opened, 6% down. We called it a thumbs down because more supply will hurt the stock. The stock was up yesterday as well. So 6% down on Masgao Docs on opening. The impact of the slide in crude is important to watch. Brent under $70, and anything that is going to be impacted positively is moving up. It's not just Interglobe and SpiceJet. So you see the airlines on one end, you will see all of the refineries on the other end. Typically, as is expected, downstream players are up in the green, while upstream ONGC in the red. As far as the paints space is concerned, Berger doing okay, about 1% up. So that's the whole crude bit of it. Business updates is the other thing that matters, and I'm going to pull up Bandhan. I'm going to pull up UCO and Bank of Baroda. Bank of Baroda strong, about 1.5% up. UCO again, good set of business updates. Bandhan not so much. Optically, the numbers looked okay, but Street seems on the fence when it comes to Bandhan Bank. A tough kind of a morning overall, and difficult to pick some winners. I would say that the clear loser though is IT stocks. Nifty IT again getting hammered.
Tamanna, a few of the conversations that we are having this morning have actually turned out. HDFC Bank, top gainer on the Nifty 50, positive update. Avenue Supermart, I want to point this out, 3.5% lower at this juncture on account of that quarterly update, and in fact losing further ground at this point. I want to take a quick view from Chakri. Chakri, 17% standalone revenue growth in the fourth quarter, and to a certain extent, yes, store addition has been looked at positively, but the negative aspect is that the trajectory of growth was the same as they saw in the third quarter, and so therefore nothing really materially changing on the ground, which is in effect a negative. So how would you look at this business? Do you anticipate the pressure on margins will continue on account of the quick commerce challenge?
Two or three things. One is, there's going to be slightly more income in the hands of the consumer starting April 1st, a couple of days ago. So some amount of addition. Second, there is, as far as e-commerce is concerned, quick commerce is concerned, there are certain restrictions may come in place in terms of the discounts that they can offer. Third, and therefore a combination of this, some amount of the share can shift back to the real stores. So against this backdrop, but Avenue Supermarket is growing really for expanding stores that will again impact the margins. So net, I think I'd still kind of be on the sidelines on the Avenue Supermarket.
Because this is an entire pack, and we assume that this would take place, and it often does. When there's a sharp move on crude, Chakri, on the downside, you have OMCs on one end that react pretty sharply. HPCL, BPCL up 3%, 2%, 2.4% respectively. IOC up about 1.5%. And ONGC on the other end, you have upstream companies that lose ground. But specifically on the downstream companies, Chakri, on the one side, you can expect that their margins, their marketing, their GRNs will improve. But then how do you see the business operating going forward? Inventory losses are a concern, right?
There's likely to be some amount of inventory losses. Second is, there might actually be a cut in fuel prices if the current oil prices sustain at lower levels. So if that happens, then clearly GRMs, the beneficial impact of GRMs is unlikely to be as much as we think it to be. So it depends upon whether oil price will stay low and whether Indian petrol prices, diesel prices will come down or not.
Nifty IT is leading the way lower for the bourses, 2.27% lower now, and that led to nearly a percent fall in the Nifty now, 204 points. So Kush called it. Well, we are circa 23,000 now, 50 points away from it. And now the small cap index too is 1.55% lower. Remember, viewers, while yesterday we may have done okay, we were not facing a US market which had cracked 4-5%. This is India being collateral damage, even if fundamentally the Indian markets and the economy don't get impacted as much as some of the others because of the tariffs. This is collateral damage. Make no mistake, if the US markets and the other world markets are correcting, there is no way that India will not correct. As of now, we do not have exceptional growth. But, before we talk about the losers, or maybe I want to talk about two pockets, right? So, with Kush, I want to talk about Interglobe Aviation and of course the Nifty call. And then, with Nilesh, I do want to talk about IT. So Kush, let me get to you first. A quick call. Do you take any trades on the Nifty right now? And of course, couple that up with a view on Interglobe Aviation, which is bucking the trend.
Sure. First, spot on when you say that, when the world markets won't do well, India obviously will fall in the same camp. We may have slight outperformance in the sense if they fall 4%, we might fall 3.5%. But yes, unless the results start to pick up. So perfectly, aligned with what even my reading is, on the Nifty. Now, as far as the call on Nifty goes, just yet, what do? Stay away for now, because the reason is that we did discuss 59 points lower on pre-open, but now we're down close to 200 points. But now we're looking at that 23,000 support kicking in. You've got the convergence of the 50 and the 20-day moving average put support also. So you've got the Nifty closer to the support zone. So you don't want to short sell at this point in time. You might not want to go long as well, because the momentum on the downside right now is pretty heavy. So for me, Nifty is an avoid. Similar for Bank Nifty, because it's given up all the gains. So for now, Nifty, Bank Nifty both are a no trade and avoid at the moment. Now, as far as Indigo goes, there has been negative divergences on the hourly, on the daily charts for a while now. With today's move, some of those are getting negated. However, what's also happening is that there is a very tight range that is building up on Indigo, which is 49.50, and I'm just rounding it off. It's actually 49.65, but 49.50 on the downside and about 5,200 on the upside. This is the range that is acting up on Indigo. We all know that the move on this one for the last 3.5 months has been stellar, and some consolidation is absolutely par for the course. But if I were to take fresh long positions, for me it would be once the 52 threshold is crossed, where the near-term selling will be done, and then the stock could see a fresh up move. So for now, if you've got a long position, continue holding on to it with the stop loss around the 49.50 mark. But for fresh long positions, you might want to wait for the 5,200 resistance to be taken out.
Okay, and Nilesh, a word on information technology. Of course, if you have some opening thoughts on the index, welcome. But I definitely want a view on IT, because it's sinking like there is no tomorrow.
Right, so Nifty IT pack yesterday witnessed a breakdown, and structure-wise, it looks like it is heading towards 30,600 to 33,500 zone. But after such a sharp sell-off that we have seen in last two sessions, there could be possibility of a strong pullback, but this pullback is unlikely to be sustainable, because if you look at the index heavyweight counters like TCS, Infosys, Wipro, SLTech, in fact, all these stocks have given a structural breakdown. So pullbacks are likely to get sold into, and we can expect another leg on the lower side. As far as Nifty IT index is concerned, we are expecting it to test 36,800 to 36,600, and a couple of stocks that are looking weak and can be sold. So TCS is a sell on rise with a stop loss below stop loss above 34.20. And downside targets are intact at 3,300 to 3,250. Apart from that, Wipro is another stock where we have seen a big breakdown yesterday. It looks like it is heading towards 240 to 235, and a stop loss can be placed at 255. Now, coming to index, the Nifty index broke below its important support of 23,100. The next support is at 23,000. That's the strike where we have seen huge amount of put writing. The maximum OI concentration is also placed at 23,000. So from intraday point of view, if Nifty sustains about 20,000, there could be possibility of a pullback. But as of now, there is no trade in the index. Better to wait for some more time. Better to get more clarity.
Okay. All right. So that's information that you need to keep in mind. By the way, let's talk about a few stocks that are reacting very negatively at this point. some understandably so. Mazgon Dock, of course, there is the government stake sale to talk about, and the stock is down about 6% because the price was dramatically lower than yesterday's closing price, and the stock has gone up quite dramatically in the recent past. ONGC now down over 5% on the back of that crude update, and a significant knock being taken. Bharat Forge, probably on account of the impact of expected decline in US business, is down about 5% at this point, taking a bit of a hit. Vedanta down about 4%. Hindalco in the metal pack also losing about 4.3%. Now, interesting thing, Tata Motors, as it continues to get downgraded by brokerages and the negative news keeps trickling in, is down about 4% or so. Kush, you had a sell call on Tata Motors. Targets hit?
Oh, all of them. First target 645, second 635, and then some more. So my suggestion, if you have a short position, on Tata Motors, by all means continue to hold. Yesterday the closing was at the low point of the day, and you're seeing, the stock continue from there on the downside. Now, long-term supports, and by long-term I mean like a decadal-long support, comes in at 600, 610 odd levels. Won't be surprised to see the stock hit those levels. If it breaks those, then you're staring at much deeper fall. But for now, it looks like 615, 610 kind of levels are in place. So if you've got those short positions, continue riding onto them with a trailing stop loss around the 640 mark at the moment.
Chakri, now the question is how much damage can be anticipated to autos? Because one, the business impact, not yet quite decided because it's open to negotiations, but the sentiment clearly negative. Assuming that no changes happen in the negotiations, how much downside for some of these because of the multiple derating, auto components in particular?
For the automobile companies, the OEMs, Bajaj Auto, Hero Motors, TVS Motors, there is hardly any impact because the tariff does not really impact the price points, and there are hardly any exports to the US. There is some amount of damage to the auto ancillary companies who have exposure to the US. And cumulatively, it's only it's a small industry compared to the overall exports. It's about 2.5 billion odd. So I think that, therefore, individual companies is what you need to look at as far as auto ancillaries are concerned. OEMs, no impact.
Okay. A very quick view on a couple of these private sector banks. Kush, I'm looking at something like an IDFC First Bank, IndusInd Bank, even AU Small actually losing ground today. Axis down about 1%. You would avoid getting into any of these, I would assume, or what would you do?
So, Alex, for me, the pecking order is very clear. And I mean, if you will recall, this is the exact discussion we had, which is, for the likes of AU Bank and Bandhan Bank, the move, in the last few sessions has been rather phenomenal. But then, the volatility creeping in again. If I were to pick the bank, something in the banking space, it will be HDFC, ICICI, and Kotak from the private space, and from the PSU space, it will be SBI, Canara Bank, and PNB. Anything outside of these has not really impressed on the price action front, on the technical front, so much so as to instill that confidence that yes, these rallies are here to sustain. The names that I mentioned could also see some sort of consolidation, perhaps some profit booking also, but there is margin of safety there. So that is why I would stick to some of these names. Axis Bank hasn't really done all that much. It's risen quite a bit, but then the short selling is apparent for the last 5-6 sessions. So some more downside could well continue. IDFC Bank, very similar case. So yeah, I'll be very selective within the banking space as well.
Okay. So by the way, Reliance Industries is also losing ground today, down about 2.3% and proving to be quite the weight on the benchmark. You have only 8 advances on the Nifty 50. Among them, of course, HDFC Bank, which is holding fort and gaining about a percent, 1.6% or thereabouts, and proving to be at least some semblance of balance on the other side of the seesaw, so to speak. Thank you so much, gentlemen, for joining us this morning. Kush, Nilesh, as well as Chakri, pleasure speaking with you as always, and thanks for taking the time. Now, IT companies